sometimes when a PowerOptions member schedules a coaching session and they're attending this presentation, they'll say, well, I see the search capabilities I have for covered calls or naked puts, and I see I can screen by implied volatility, or I can screen by option volume or open interest. What is a good range? What is a good range I should consider from some of these filters? Well, if you ever have a question about a specific filter on the search tool, simply hover directly over it. It gives you a brief example. Or if I hover over IV over HV, shows me the ratio of what is IV over HV, what am I considering to enter to look for an overvalued or an undervalued option as well in that case. So when the question comes in, what is a good range to look for? I encourage them to go into the Learning Center, and from the Learning Center menu, click on Market Activity. And in the Market Activity, we can click on Optionable Stock Statistics. This is the average. Shows you the high and the low and the average, let's say the mean or the average, of various stock and option criteria in this case. So, what is the mid of the stock last price across all optionable stocks indexes and ETFs at 60.92? Option ask price is 27.54. But going further down to some more important levels, what is the average implied volatility on all options right now? It's at 1.13. That might seem kind of high, but we have to consider things that are going on in the market right now in addition to earnings coming up. What do I mean by things going on in the market? Well, there's still the whole talk about the debt ceiling. There's still talk about the $3.5 trillion infrastructure plan. There's concerns about too much debt going forward and things of that nature. And so that's why the implied volatilities, I believe a few weeks ago, the average implied volatility was only at 0.8 or 0.82. And it was in the middle of August, beginning of August, 0.8 or 0.82. And it's gone up since then because we're entering the earnings cycle and other things going on as well. Okay, the average 50-day volatility for the stocks is only 0.38. What have we been doing? We've been melting up and then pulling back down, and then melting up and then pulling back down. So it's been relatively stable, but the forward-looking fear and the average implied volatilities are much higher. Put volume, put call volume ratio, put call open interest ratio as well. This is a silly one, but it's always fun to look at. The average delta is 0.5. Does that make sense? Absolutely makes sense. You take every option, and you're going from deltas on an option chain for every option from 1 to 0, 1.0 to 0.0. So yes, the at the money 0.5 makes perfect sense, but you can see the average theta, average gamma, so on and so forth as well. I come here to give a gauge for customers when they ask the question about the implied volatility and the stock volatility. It gives you sort of an idea of what the stocks are doing right now and what the market has the expectation of going forward. Overvalued options, which is a good thing. But again, it also points to potential turbulence on the horizon as well. Which leads us into sort of Jesus' second question and David's question. Jesus asks, excuse me, can you go over the market sentiment? Is it still bullish? Well, right now it's still in neutral. It hasn't triggered enough to go into a bearish warning, even though we saw some small declines the last 4 days, I believe, 5 days in that case. But it's still neutral. Now, what is the market sentiment? This is something Ernie developed where he went through 35 to 50 different market indicators, things that would indicate market movement, how these things react. Is there anything that's a precursor to a market move? Talking again about that put call volume ratio. You see that's in the bearish mode. We just saw the number a moment ago on the Market Optionable Stock Statistics page. The number of days SPX has been up. You saw patterns that when you have 4 or 5 days up in a row, it usually tends to lead towards the bearish because it's usually going to have a pullback at some point. And if you have 5 or 6 days down, as you can see, it's starting to move to the bullish range of the different fences that are set. VIX price, the TRIN, is actually still bullish, the EMA 10 on the NYSE. The number of days that the SPX over the 100-day moving average is bearish as well. And the MACD gap is actually bullish. Why is that? Well, it's because it's been declining. And so the lower side gap is pointing to more of a bullish indicator. So we have 2 bearish indicators, 2 bullish indicators, and 9 neutral right now. So it's not hitting the tops anymore. We've had an easing off, Jesus, where it started to come back down, or the market's been pulling back. And it's not to say that a black swan event might not occur. That's something that maybe even the market sentiment can't pick up. It did back in February 5th through 9th of 2018, of course. It started showing the sell warnings on or around January 10th and January 11th of that year before that quick decline happened. But that was more of a black swan event that was unexpected, not related to this in that case. So and anyway, right now, Jesus, we're still kind of neutral, but we've been seeing an easing off of the prices in the last few days, as you're well aware. And so it hasn't triggered into a light buy or a bullish mode yet. And this might relate more to David's question. Not relate to David's question, but this does relate to David's question. I don't have a clear answer for you, David. Well, you said, why are gold and silver ETFs going down right now? And it could be anything due to fear of the economy in itself. And they think maybe gold and silvers would be safe havens, but the fear of the dollar and fear of everything else, again, going back to that, David, I haven't seen anything specific, but I haven't been paying attention too much. Let's just take a look at SLV real quick and see what the chart has been doing. Yeah, so with everything else, it's been pulling down with fear about the economy, things of that nature. And yes, you'd think it might be a safe haven, but the materials prices have been declining, as we can see. And let's see if we can just see any basic information. Anyone has any insight, feel free to share it with me. I just haven't researched it today. Experts think gold could shine in the second half. You never know in those cases. But maybe related to other things like that. Not going to change gold's role. Yeah. And so we're not seeing any real information about why it's declining, any real insight. I know this isn't the only place I'd go to research, but for our time today here as well. I haven't seen anything, but I'll keep looking for you, David. I'm not real clear, but I think it's just related to fear of the overall economy and where we think it would be a safe haven right now. It's just not looking that way, or fear of the increasing debt as well. It's a good question. I'm not real clear, but I'll do some more digging for you on that.